Hi, it's Nick Carlisle from Platinum Portfolio Builder. Now, over the last few weeks and for the next few months, we're well and truly into show season. Lots of property shows, exhibitions around the UK. And if you check out our website, you can see where we're going to be in the coming weeks. But as we go to those shows, we've been going to those shows and exhibitions now for probably about 6 years. We've started to notice the trends of what's popular, what people are looking for, and more interestingly, what other companies at those exhibitions are promoting. Now, there's been quite a sea change. We went through quite a lot of overseas investments, and there seems to be now in the exhibitions a lot more focus on the UK. Now, we were at one of the largest property exhibitions at Excel just a few weeks ago, and it was interesting walking around looking at what other companies were offering. And for you as an investor, I guess going to a show like that, an exhibition like that, it must be quite difficult to pick out the good from the bad, and the good from the bad and the ugly. So I just want to share with you our view in terms of what makes a sound investment, because as the economy starts to move and as we start to see more activity in property, you could get stuck with a really bad investment from all of the hype and the marketing that is out there, particularly if you go to a property exhibition. So at the last show, we started to see a lot more student investments. Now, student investments do warrant a certain type of investment, and they warrant having a closer look at. But the problem with student investments is you won't get finance on them. There is a real limited resale market, because you're not going to be able to sell a student investment to anyone else other than another investor. So as opposed to buying individual houses, individual properties where you can sell those to investors or first time buyers or just the general population, student accommodation tends to be limited to that thin vein of investors. In a lot of areas, particularly some of the big cities, we've seen an oversupply in areas, and the developers have actually moved the location of students through their redevelopment, and the change in tastes and demand has meant that cutting edge state-of-the-art student accommodation from 2 or 3 years ago is now looking very tired and a poor option for the students, as opposed to the brand new shiny investment that's going up at the moment. So student investments I'd be very wary of. Hotel rooms are very similar in the sense that you get very limited finance opportunities, no refinance generally, and again there's that limited resale market. So if you want to resell your investment, you are limited to investment buyers. And then the big question for me with hotels is, what if that hotel operator fails? Now, loads of hotels are more than successful, but you have to look at the end game and the maximum risk that you could be exposed to. And if the hotel does fail, then you're going to be left in there with a series of other investors, presumably not knowing how to run a hotel. So massive risk in that. HMOs, a growing market. It's been growing, it's been expanding for a number of years now. Absolutely superb from a rental income point of view. To maximise the rental income, the headline rental income of any property HMO is probably the best way to do it. But the ongoing cost, the ongoing management tends to leave the investor with a very similar return in their pocket to that they would get if they went into a straightforward buy-to-let property, but without a load of the hassle. So HMOs done really well. If you were going to do HMOs, I would suggest focusing on HMOs at the top end of the market rather than the cheap and cheerful stuff. At the property shows, we're still seeing quite a lot of overseas stuff, although there was less this time at the property show than the last 5 years that we've been there, and I think that's more about the sentiment from UK buyers, UK based investors that want to stick to home soil, and I would wholeheartedly agree with that. I don't think you need to take the additional risk of legals, the travel distance and the currency risk and go overseas to find your investments. There are much better, much safer investments in the UK. And then what was interesting this time is we saw more and more of these crowd-funded investments. Crowdfunding is becoming big business in property terms, and there were a number of crowd-funded investment opportunities at the show. Now again, these can allow you to invest into property for a much smaller amount of money. I think again the big thing for me is what's the exit on that. If you're going into a crowd-funded investment, you need to be really clear, and it needs to be predetermined of what the exit is, and thus can represent quite a good investment. Same message from us as always, is it's the dull and the boring stuff that works really well. The closer you can get to the ownership of the property, the better. And in simple terms, you need to be owning the property, not a consortium, not part of a syndicate, not part of a bigger conglomerate of investors that own a larger asset. If you can own the individual property yourself, that's a real winner. Maximising your resale potential and maximising the resale opportunities, not just in terms of the values that you can achieve, but the routes to market. So again, dull and boring, simple, solid, safe, reliable 1 and 2 bedroom apartments, 2 and 3 bedroom houses that investors will buy, that first time buyers will buy, that the whole of the population could potentially buy. And it's those simple, affordable houses and apartments, so not the real cheap and nasty stuff, but rung 2 or 3 of the ladder where you're going to get the best returns both from a discount and from a yield. So thanks very much for listening. We will be at a number of these property exhibitions and shows around the UK, so please check out our website, and I look forward to speaking to some of you there. Thank you.